G'day folks, welcome back to another update for natural gas. Now there is a bit of a bearish retrace in play. We'll cover that in the charts in a moment. Before you go any further, make sure you hit that like and subscribe button to support the channel. Also do reference the +1 videos where we look at various strategies. The latest one we just did a couple of days ago, so reference that for those particular strategies on your screen right now. In terms of the outlook for demand, growth slowing, expected to plateau near 2030 at 4,400 to 4,500 by the end of the year. LNG expansion, record build out, 250 to 290 BCM near liquefaction capacity by 2030, led by US, Qatar and Canada. Supply capacity, LNG export capacity rising about 40% by 2028, risk from delays and infrastructure gaps. Market balance, very tight today, but oversupply risk by late 2020s could pressure prices downward. For Asia and India, Asia drives demand growth. India could see a plus 60% demand and doubled LNG imports by 2030. In terms of risks, transition policies, geopolitics and contract strategies will shape long-term market stability. The longer-term trend first was somewhat neutral on the weekly here. And the reason I say neutral is because we've got here the price below the moving averages, which is bearish momentum on the price, but the CCI is broken above those moving averages, giving us a somewhat bullish trend indicator. So as soon as we see the price break above the moving averages, that could be a start of a bit of an uptrend. There was a bit of a false break back here, although that sort of seemed to move up higher for the weekly, although somewhat sideways. So we wait for that to break above the moving average of the weekly to be considered bullish. This is the weekly chart. If we go back to the daily, and a bit slow at the moment. But go back to the daily here. First off, let me just talk about it down here. We've got the CCI above the moving averages, although notice it's pulling back to the moving average range on the CCI moving averages. On the price, you can see there it's broken above the moving averages. So it's still bullish momentum at the moment on the daily. And that was a result also of this bullish divergence, a double bottom on the CCI versus lower lows on the price. We've marked it there with an arrow to take long trades from here on. Now just be cautious. If you have been going long, been following it, I'd be closing it out at the moment with a potential, it looks like it's touching that moving average on the CCI. So take your profits and get out of the trades at the moment. And you would have been going short from this period on this arrow when the price broke below, and so did the CCI. You would have taken short trades there, closing it out on that candle there when the CCI touched. You might have gone long there, but again, another thing to notice as well is I'd like to see the moving average band bend up like they did back here, and that's why I've got multiple moving averages, not just one single moving average. So even though the price broke above there, notice the moving average band was still in a decline, and even though the CCI was in an uptrend as well. So at that point, ideally, to be strict with the rules, don't take long trades until you see this happening. So you would have started taking long trades back here once around that, one of those candles there possibly. So that's the daily. On the hourly, we look for micro trends. So if you're trading on the hourly, we also look for any divergence. Now what we had back here before our last video, we had lower highs on the CCI versus higher highs on the price. We drew a target range. Now since then, the price has gone higher, but notice the CCI hasn't really made any further real upside moves. So the highs remain to that point there. That's still a bearish move on the CCI. If you extended that to that point, that now has to readjust for that divergence. So what we do now is we draw another Fibonacci retrace, take it back to that range there. Let's take it back to that low. And we change that and move that to that area there. So that's our minimum target. You can see there it's already touched it there once, bounced, and it's broken right into it this second time there. So the CCI is still dropping. So at the moment, we're looking at a bit of a bearish momentum on the hourly. But at this point, don't go long or short until we see the daily. If you're trading on the hourly, don't go long or short until you see the daily decide which way it's going to go. If the daily starts to bounce, the price is already above the moving average. I want to see that bounce off that moving average range to be bullish, and by that stage we should see the hourly also break higher than the respective moving averages. In terms of the back test, first working backwards, I've got the long positions going from about the 26th of August from this period on the hourly. So again, going long according to the daily, and you would have taken those long trades, but notice again we've got this bearish divergence, and I'd be closing out the trades at the very latest where we are now. It's already hit the, as I said, it's already hit the Fibonacci range. If I was trading this, I'd be closing it out now where it is at the moment because of that daily touch point there. In terms of the short positions, going short from that period back there, just to demonstrate the back test, you would have taken short entries from there. Again, paying attention to when the daily broke into that moving average range. So you can see there on the daily, it broke in there, and that it corresponded with this area here on the 1 hour chart, and you would have avoided that drawdown. But also notice that do we have a bullish divergence? No, we don't. There's no bullish divergence there, but that's why you've got to also pay attention to the daily, and you would have closed that out at that point. Here we had a bearish divergence, and it would have been nice. Wait for it to break to the downside on the CCI and price, and that also corresponded with this bearish divergence here. You would have gone in short for those trades. Again, follow those trades along with the daily, close it out there, and you would have closed it out there as well, and so on. And until today, you'd be closing it out, like I said, and possibly getting into short positions. Now, again, avoid going short during this long period. This backtest just runs through the whole period. I'm just telling you, avoid going long whenever you see the daily start breaking against, going against the trend. So for BOIL, first off on the weekly, very strange chart this one, but you can see there we've got, if I zoom in, you've got below the moving averages on the price chart and a CCI, so bearish momentum on the weekly chart. It's a bit hard to read that one. On the daily, in accordance with the weekly trend, you're going short, so you would have been going short from this period. Again, closing it out on if you're trading on the 1 hour, or you've been closing it out whenever the CCI touches those moving averages. And that's where we are at the moment. Slight move on the CCI above the moving averages, but notice the price, the moving average band is still wide. I want to see that turn up and like it did back here, for example. I want to see the bands turn up into an uptrend to be more bullish. So at the moment, neutral positioning on the daily. On the hourly, we'll look for any micro trends. Again, we had a bullish divergence here. We projected this target area, and that came close to touching it. Looked like it just possibly touched it. And that point there sort of went sideways, and currently it's dropping off again. So it didn't quite hit that target range. But that's okay. They don't always work, and that's why I don't trade them, because they're very unpredictable. I trade the direction of the daily trend on the hourly chart. So this is the hourly chart. At the moment, the hourly is in a downtrend, in a bearish momentum. If we go to the back test, again going short from this period around about the 20th of May, you see there we ought to take those short trades and avoid going long whenever the CCI is above into that moving average range. So that's doing quite nicely on BOAL, trading $5,000 lots. So this is UNG on the weekly first off. We've got a bearish momentum on the weekly, but notice the CCI is just about to touch that moving average band. So if you're going short on the daily, I suggest you probably take your profits and stop the short positions. On the daily, it's actually bullish on the CCI and somewhat bullish on the daily on the price chart. But again, notice it's pulling back. It looks like it's possibly going to break to the downside. Again, if you're trading on the daily, wait for both the price and the CCI to break to the downside, like back here, to take short positions. So avoid going long at the moment, but also avoid going short daily if you're trading the daily. On the hourly, if you're trading, we go in the direction of the daily. So you would have taken a position in one of these periods back here, and that also aligned with this bullish divergence. And again, you can see there that target range drawn there, the 23-38% Fibonacci range, and that filled that 23-38% quite nicely with that price movement. And at the moment, it's currently on a bit of a bearish momentum. Now, on the back tests, again going short from about the 15th of May, this period back here, just to demonstrate, taking short positions only. And again, you would have avoided any bullish divergence, so you would have avoided going long during or short during that period, and there were no positions opened according to this strategy, the CCI14 strategy, and you would have opened up another couple of positions in the downtrend here, then avoided another position, entered another position down here, and currently you'd be avoiding any trades in this period here because of the upswing in the price. Getting close to entering another downtrend position, but only but again, to be confirmed, wait for the price and the CCI to break to the downside to be more confident. If you're trading on the hourly on its own, it's a bit of a risk to go in that range, because you can see here that, for example, during these periods when it broke above on the price, the moving average band turned up, and so did the CCI. That on the hourly alone, it showed bullish momentum, but notice you're in a downtrend on the daily, and you want to go in a direction of the higher time frame is the key to trading. And for KOLD on the weekly, first off, you can see we've been in a bullish momentum for a number of weeks, and currently you notice the CCI is coming and touching that moving average range. So if you're going along on the trading on the daily, you'd be taking your profits off the table at the moment and being happy with that result. But again, notice on the daily, it's already broken below the moving average range, so you would have taken your profits a lot earlier, probably when it broke into that moving average range there, if you're trading on the daily. But at the moment, if you're trading on the hourly, wait for the price and the CCI to break either higher above the moving averages, or alternatively for them to retrace to the downside to take short trades again. But at the moment, you would have been going long on the hourly if you're trading the in the direction of the daily. On the hourly chart, again, we're looking for any micro moves. Again, we had a bearish divergence back here. That actually would have continued to that point there. Same period on the CCI, so that was a bearish divergence. And to draw a Fibonacci range on that one, I didn't draw a target. If you take it back to that point there before that, that was a key low. You can see there it broke very easily through the 23-38% range. And that would have been that range there roughly. Now that at the moment, looks like the price and the CCI are moving slightly higher. So I might see a continuation to the upside here on the hourly. But again, don't forget, we trade in direction of the daily. So wait for the daily to make a decision which way to go. Now, if you go look at the back test, again, taking long trades here on the daily, the 25th of June, we're taking long trades only. Now, notice here we had a bit of a drawdown. And if you follow my strategy, let's see what happened back here. The daily there broke into the CCI, and that corresponded with this period back here on the 1 hour time period. Now, you would have had a few contracts open there, and that still would have returned you about $751 up here, approximately, if you had traded $5,000 lots of contracts. But also notice that was bending down on both the price and the CCI, so that would have been an area to get out of the trade. Avoiding that drawdown, then going long again during this period, paying attention to any divergence. You had no contracts open there, then a few more open there. And again, a bit of a drawdown there, but currently moving back into your favor. Now, but notice there, that would have been equivalent to this area here on the daily. So you would have closed out your positions on that one there with maybe a couple of contracts open, and not had taken any further trades. So always pay attention to the daily trend to trade whatever you're doing on the 1 hour time period. So thanks for watching. Hit that like and subscribe button to support the channel. If you enjoy the content, subscribe at least on a free trial to my Patreon page, where I publish weekly bullish shares across various regions of the world's markets. Thanks, and talk to you in our next video.